Market panel. Jonathan Hoenig, the Capitalist Pig hedge fund founding member, is with us. He's a Fox contributor as well. Hadley Heath Manning, independent women's foreign policy director. And Todd Harwitz joins us today, the Bubba Trading Show host. And I say interesting, Jonathan, because, we watched all the back and forth today. I think Jerry kind of hit on it, right? Because if you look at what FedEx said last night, that's basically what the Fed said today, is that the reason we're not going to hike rates is because around the world, the economy's slowing down. What do you take away from it all?
Yeah, I mean, kind of a fascinating market today, a mixed market in many ways. The breadth was essentially flat, about 106 new highs, 80 new lows. But take a look at not only what the market did, but what President Trump said, promising in effect that those tariffs would stay in place against China. And what you saw, Colin, was a lot of essentially just mixed market. I mean, the dollar was down, gold was up, and a lot of just people shaking their heads saying, well, is it going to be Merck? Is it going to be Starbucks? Is it going to be PayPal? Those are some of the 52-week highs. But the Fed essentially a mixed market and a lot of distress among a lot of market watchers trying to get a sense of what the next move really is for rates and for the market writ large. Right.
And the big picture, Hadley, again, is that we do have slowing global growth. But to Jonathan's point, maybe the president's comments about China are just as, if not more important. But that plays into kind of the same thing here, is if you have the tariffs staying in place, that doesn't help growth either. So it's just interesting to see kind of the sentiment change as the day went on.
Right. And sentiment data has been more positive than maybe some other indicators just in recent months. And when Powell talked about potential for rate changes in January, he was very positive on the U.S. economy, but he mentioned cross currents. And we can only imagine what he meant by cross currents, looking at international markets. Certainly a slowdown. China just simply could not continue to grow gangbusters like they have been. It's a natural slowdown, I believe, in their economy as their sort of industrialization and growth period just slows down. It's a natural thing to happen. And when it comes to our relationship with China, of course, the uncertainty there. And I would say an additional cross current maybe for us to consider about our U.S. economy right now, and something that the Fed should be concerned about, something that politicians on both sides of the aisle should show more concern about, is, of course, the national debt. And that's a piece.
Well, Jay Powell did say that deficits still matter. I know we asked that question of everybody. Todd, what do you think's really going on, or what stands out about today to you?
Well, I think that Powell did what they expected, but I think the street was more expecting even them to talk about possible rate cuts. Now, I think the bigger picture here, though, is we've got inflation. We can talk about that we don't have inflation all we want, but at the end of the day, other than the grain markets, every other commodity is up 10 to 15% this year. We're having a slowdown in transportation. We're having less goods shipped into the country, not only because of China, but for many reasons. So there's a lot of underlying problems in the economy and in the markets. And, of course, you've got wage inflation to tie in with it. So at some point, we've got to address the massive debt and the massive problems that are here. But we continue to just hide our heads in the sand and kick the can down the road and keep rates cheap and not address the real problem, which can start with the national debt, but can go to credit card, student, and auto loan debts as well. Those are big problems. And if we continue at this pace, there's going to be a big meltdown at some point.
All right. Okay, well, let's check in on oil.